Hi guys, and welcome to our video for today, the 17th of August 2026. So for these stocks on my watch list, IPST, TRUG, and WETO. And we're going to go through each one, looking for the 5-minute time frame for some day trades, look at the 4-hour time frame to see what we need to hold these stocks overnight, and then also the daily time frame to see what we can do to hold these stocks longer than just overnight, and potentially into Thursday, Friday, or even next week if we're lucky with swing trade. So we're going to start here on IPST. So I've done my support and resistance levels, and again we're starting the 5-minute time frame. And just to add to that, we're going to look for entries, exits, etc. So again, I've got my resistance levels here. So I've got $8 as the resistance here. And basically, I do like this one for a day trade as I can measure from the up thrust here, 8.92. So in simple terms, that just means the high of day for now. And draw a negative trend line, then convert it to a falling wedge formation like this. And basically, it just means we're consolidating now between 8 and 6.5 in around a 20% gap. And in the falling wedge, and once we break over 8 by 2-3% over 1 minute, green candle close above $8, then we should move at least 8% from entry for a day trade. Then the stop loss has to match in order for the risk to reward to be valid, obviously, for a day trade. And this one does look good. Significant volume in this one. I'm riding the ATMA, so riding the weakest indicator on the chart, which is obviously bullish. If it's riding a really weak tightrope, obviously it's confident enough to go up in price and carry forwards. So that's the equivalent of riding the ATMA, guys. However, though, an adverse effect, looking at it in a negative way, if we were to lose 6.5, we'd also be losing around the Bollinger Band center. Here, this orange line here, so we'll be losing the 1-day horizontal and also the Bollinger Band center. And this orange line here, the Bollinger Band center, when we're above it, we're 65% more likely to remain above it. When we're beneath it, we're 65% more likely to remain beneath it from that point onwards. So again, it's basically the line in the sand of the chart for me. So beneath 6.5 on this, I wouldn't want to be in this at all for a day trade, holding it overnight, or a swing trade at all. Just beneath 6.5 is no good on IPST. So let's keep an eye on this for a day trade, breaking over $8, and again beneath 6.5. I wouldn't want to be in this, to be honest. So let's go to the 4-hour time frame. So what do we need to hold IPST overnight into tomorrow morning? So I quite like this one with a 4-hour green candle close of $8 on this for continuation towards 10. So I'm going to put this in the faint yellow, and basically once we get a 4-hour green candle close over $8 like this, as you can see here, we should continue up towards the next resistance of 10 for around only a 15-20% sort of move. But how we can manage it is we can sell 50% there in profit to mitigate some shares, and then sell 40% higher up at around $12, the major resistance up here, which kind of aligns with the 200 exponential moving average in the 4-hour time frame for death cross retest. And yeah, that makes the trade a lot more better if we're scaling profits around 40% of our position higher around that level. So again, I wouldn't hold this overnight until we get a 4-hour green candle close over $8 in this one. And again, beneath 6.5 is still valid for this stock to be done for holding it overnight, etc. And yeah, we'll just wait until then. I won't hold this overnight at all until we get that close over $8 by 4 p.m. Eastern time, ended today or ended tomorrow, 4 p.m. Eastern time on IPST. So going to the daily time frame, so if we can hold it for longer than just into tomorrow or Wednesday, depending on when that happens, we can have a look what can happen. Here in the daily time frame, to enable that, for holding it longer, and to be honest, having a look here, I would say, the daily time frame just further emphasizes what's going to happen on the 4-hour, to be honest. If we get a daily candle close of $8, specifically a green candle close of $8, we should gradually gap up towards 12. But again, remember 10 is a resistance, we need to respect that. And also, it's a psychological number where people are going to be selling. Insiders have price targets there. There's going to be more selling pressure around there. So it's important to mitigate the trade by selling 50% around that, around $10. So again, a daily candle close over 8 just emphasizes the fact we're going to go up towards 10 and 12, and there's not really too much to add to that, to be honest. So again, I would just focus more on the 4-hour than the daily time frame on this, because it's going to happen quicker as the candles every 4 hours, not every day. So that's how I trade that one. And again, beneath 6.5, I wouldn't want to be in this at all. It's going to probably drop towards $5 and beneath. So that's IPST. Keep an eye on it over $8. And now we're going to go to TRUG. We've already traded this in the Discord today by one of our advanced traders, Arlette. This one looks good. I really don't like the resistance here at 1.7. I usually always look for an 8% first target on this, and we did break over 1.7 beforehand around 20 past 10, and it only ran around 7%, 6-7%. So I look for an 8% first target. So this tells me the relationship of 1.7 isn't really strong enough for a break and take profit towards 8%, what I typically like. So I try and avoid it because there's no certainty it's going to do that again. It's not showing me it's capable of doing it there, so why would it be capable of doing it again? in a different way. So what I'm going to do here is put it all in a big falling wedge formation like this, and then wait for 2 to break on this one. So I'm going to wait for the stronger resistance to break on this. Then I'll be looking to enter this for a day trade. I'm on the 5-minute time frame with a push beyond 2 by 2-3%, a 1-minute green candle close over 2. And again, I look for a 10% first target on this one actually, and it looks quite good, because basically the top of the Bollinger Band is here, and 95% of price action takes place in this navy line here at the top, and this navy line here all the way at the bottom as well. So it's going to be euphoric and break out this 95% of price action prison if it does break over $2, which is also strengthened by the horizontal resistance, as you can see here. And once that happens, again, it should be very good for us to hit the first target. However, though, looking at adverse effect, if we do lose 1.5, looks like we're coming towards 1.4, and if we lose 1.4, I think we're done on this one, to be honest, for a day trade, holding it overnight, and a swing trade as well. Probably coming deeper towards the golden cross retest, the 60 exponential moving average, this gold line here, around 1.2, 1.25. So beneath 1.4, I wouldn't want to be in this at all, to be honest. And again, over 2, I'm happy to trade it. But until then, it's doing nothing, just consolidating, and I won't touch it. So going to the 4-hour time frame, this one looks quite good, guys. So a 4-hour green candle close over $2 in this would be really good, and see us gap up towards 2.5. It's not really a previous runner, but it's typically a small cap which has lots of volume, and it's always due a squeeze, TRUG. It's always easy to trade, to be honest. So once we get a 4-hour green candle close over 2 and the 200 simple moving average, as you can see, this thick white line, which is strengthening the resistance here, it should gradually gap up towards 2.5 for around a 20-25% sort of first target on this. I wouldn't look to sell any more. I just sell 90% of the first target on this one, as it's traditionally a slower mover. TRUG in contrast to other stocks. So that's how I trade that one. And again, if I enter around 2.1 and I look to sell around 2.4, 2.5, I don't know what that is, we can measure together, and that comes to around a plus 15% sort of move. So I'd make sure my stop loss doesn't outweigh that. So I'd have a 10 to 15% stop loss to keep an even risk to reward at least. So yeah, I'd only enter this for holding overnight with the 4-hour green candle close over 2, but end of today or end of tomorrow 4 p.m. Eastern time. And again, remember, beneath 1.4 is no good on this one. Let's go to daily time frame and see what we need to hold this for just longer than 1 or 2 days on the 4-hour time frame. Let's go to daily time frame and see what we can find for ourselves to hold it longer. And to be honest, there's not really much that it does for us. Again, just daily, same as the previous stock, guys. The daily time frame just strengthens the idea of what we know from the 4-hour time frame. The daily candle close over 2, which you see is gap up towards 2.5. There's no other moving averages around here, no other resistances around here, which suggests otherwise we're going to gap up further. And yeah, nothing more than what the 4-hour time frame could do for us. So again, I focus more on the 4-hour time frame on this one, and wait for the 4-hour candle close over 2, and then we should gap up towards 2.5, around 2.4 to 2.5. It's always smart to sell some just before the resistance in case we just front run it a little bit. So let's go and finish up then on WETO. So you can check our previous video on this. So we mentioned how a break of 10.5 would see it hit 17. Obviously we've done that and ran up to all the way to 23 essentially. So we'll start on the 5-minute time frame here. So again, I'm going to use my fancy word up thrust here. So we've got 23.73, that high here. I'm going to measure from there to draw my falling wedge and draw a negative trend line, converge it into falling wedge formation like this, as you can learn with our falling wedge seminar. Link in the video description and Twitter bio. So this one here, if you're a risk taker, I think a push beyond 20 will see us gap up towards 23.5, 24, as it's just another falling wedge breakout against the resistance of 20. And structurally, the top of the wedge around here is the first target and limitation of where I expect the breakout to go. So you can see I've circled here 23.5 around there, and also where the limitation could be for the top of the wedge. And that also prints a double top, doesn't it? So it all kind of glues itself together. And again, you can learn more about that in our seminars, give you a better understanding. And yeah, a push beyond 20 would see this one rise. I would take profit around 8% from entry just to be safe on this. However, if you want a more concrete trade, a 1-minute candle close over 25 or a 2-3% push over 25, we see this run at least 8% from entry if you want a more definitive and safe trade. But this one over 20 should be good, because every minute we spend beneath $20 is every minute $20 becomes a stronger resistance. And that's something important to know for your day trades as well, as you may be unsure of a resistance. So as if it takes another half an hour and the resistance just builds in strength because it's not broken upon it, it adds more weight and strength to the trade that you've got in your head. However, though, again, we've got to look at it in a downside way and a risk management way in terms of managing the losses. And I would say I mean, just look at this here, guys. I mean, it's a 40% drop from where we are right now to the resistance, to the support of 10.5. So it's a bit too wide for stop loss, but I think if we lose 14 on this, we'll be coming to around 11. So if we, it depends, if you're in this around, it's basically, if you're in between 17 and 24, I would say if we lose 14, I wouldn't want to be in the stock. However, if you're in the stock from 17 to 14, I would say if we go beneath 11 points, wherever the top of this candle is, we can measure it together. So it comes to around, put it in purple, the high of this candle is 11.45. So if we, again, if you're in this between 10.5 and 14, if you go beneath 11.4, I think this is done because it's lost a 60 EMA and it's also lost a bit of support here. That can, basically, it's where the halt started, the gap up and the halt and volatility and seismic move upwards started from this point when we broke this point, didn't it? This purple line. So if we lose that purple line of where it all started, then it's in a worse position because it's not come back to where it started. It's gone further behind. So if we lose this purple line 11.4, it's definitely done in my opinion. And coming down even further for golden cross retest of even deeper of 8 around here, yeah, 8 for the 200 exponential moving average. So again, just write this down as we go along, so don't forget. So there are key levels not to be lost, depending on where you are in this and your position. So let's go to the 4-hour time frame. What do we need to hold this overnight? We need a 4-hour green candle close over 20 on this to hold it overnight, and we should gap up towards 27 for a death cross retest, the 60 EMA on the 4-hour time frame. That's because what I see right here is a 4-hour green candle close over 20. I'm going to draw it in like this and put it in green like that. You can see this candle here that we can kind of predict basically engulfs this previous high and this previous candle before. So it should continue up and gap up towards the next moving average of around 27, the 60 EMA. So I'd look to hold this overnight when we get a 4-hour green candle close over 20. And yeah, until then, I wouldn't look to hold it overnight at all, to be honest. And again, the stop loss still matches in terms of what we previously discussed on the 5-minute time frame. Daily time frame looks really good. So in contrast to other two stocks, WETO is the best daily time frame because it all works together again, which is kind of rare for a video like we do here. But the daily time frame just emphasized the 4-hour time frame. A daily candle close over 20 would see us gap up towards, I would say 30, to be honest. It adds more weight to the idea what we've got, but just also increases the profit target as well. So a daily candle close over 20 again engulfs the previous daily candle acting as a resistance. So again, I'm going to draw it in like this. When we get a daily candle close over 20 like this, it engulfs this candle here, doesn't it? And we should expect to continue up. And the next resistance isn't until 30, I would say, the major one. So it looks quite good, to be honest. So I'd focus more on the daily time frame, one step at a time. Wait for the 4-hour candle close. But if we get a daily candle close over 20, I'd say 30 should hit, and that's around a 40% first target / take profit. Where I sell 90% on this one, I wouldn't mess around selling 50% and 40%. I'd just take 90% profit there. And I'd wait for the 4-hour candle close first, and then once that happens, see if we get the daily candle close over 20. And if that does happen, when we get the daily candle close over 20, I know we can take profit around 30, not just limited with 27 based off the 4-hour time frame. So this one definitely looks the best for a swing trade, WETO, and I look forward to seeing what it can do. And again, you can check out our previous video on WETO from the Atlanta Trading YouTube as well and the Twitter accounts. So yeah, thanks for watching, guys, and catch you all later.